Yeah, no, hey, Kelly, thanks for having me. I think it's really interesting. Our group was a big laggard early in the year when stores closed. It made perfect sense. But I mean, the group's rallying. It's up 30% plus over the past couple of weeks. I think that, look, there was a lot of concern around weak store volumes upon recovery. There was upon reopening. There was big markdowns from all the leftover inventory that these retailers needed to clear that was going to pressure margins. And then to your point, back to school basically didn't happen for reasons that are pretty obvious. But I think what's interesting over the past couple of weeks in September, since then, we've seen the space showing some real signs of material improvement. On top of improved pricing, I think that the back-to-school sales actually shifted, didn't completely disappear. So you actually saw that come into September and away from August. The weather's breaking. Consumers are driving some pent-up demand there. And then what I think is the most interesting that people aren't talking about yet is consumer dollars have to go somewhere. People aren't traveling. They're not spending money on experiences. They're not eating out. So some tangible goods, softline goods, they're coming back. So that's all good news.
Yeah, it's surprising and it's encouraging to hear. Some of the companies that screen highest here for your September rankings are familiar names: Lululemon, Nike, even TJX companies, which is probably a break for them, given that TJ Maxx has struggled without having its locations. The number one name is Deckers. Is that, am I right to read that that's basically an UGG play?
No, so my associate, Tom Nikic, covers Deckers. I think it's actually more of a Hoka running shoe play, sidecar growth brand there. But I'll agree with you that I think that the buy-side expectations are going up on a lot of these names, especially in athletic, and I think that's why you see Lulu and Nike towards the top. Some other names that are in there, you mentioned TJ, the off-pricers, we're bullish on those. That's Burlington, TJ, and Ross. But I also think that besides the obvious, the off-price, the athletic names that are very consensus, I think there's some interesting value creation names that exist in retail. The two that are our favorite are Gap, GPS, and L Brands. I mean, these are both portfolio names, optimization names, and have had great runs, but we think have a lot more in them.
Fascinating. And the Hokas, I know people love their Hokas, so that explains why Deckers is so strong. Would you recommend, I mean, it sounds like you obviously would, but for Gap and L Brands, two really tough stocks, is this a turning point?
We do think so, and we've been vocally bullish on both. They've had good runs off the bottom. We think Gap is very undervalued. When you look at it on a sum of parts analysis, I think people get overly focused on the struggling Gap and Banana Republic brands. We look at the Old Navy and the Athleta as the real value drivers there. And then with L Brands, it's a similar story. Victoria's Secret and Bath & Body Works, too much focus on Victoria's, which has had a tough go of it, but is stabilizing. But we think the Bath & Body Works concept, very undervalued, not getting the love it deserves. And we think the market is beginning to figure that out. You'll see more upside into next year.
Shepard Smith here. Thanks for watching CNBC on YouTube.